Welcome back to another week of fundamental analysis. Currently, right now in Japan, so I'm uploading on Monday, um, but we're going to get this done. I did take um, a loss on my gold trade, it's taken me out, and right now my girlfriend is taking some photos of me, but we'll run through the gold trade that we've taken and we'll go through the profit for this month currently. So um, right now we're on a daily chart. You guys can see I trailed my stop around $2,612. I've added another position here. I think it would have been 0.05 lot size. We obviously lost that trade and trailed out for a profit of 4.61 risk to reward. So going to my stats, you guys can see that I have on the initial trade we trailed out at $895.66. That was after fees, and then in October, our first trade, we did take a loss of $212. So currently, right now, in terms of equity, I've got $1,579. We did take another trade on oil, which we'll run through towards the end. But let's go through the actual analysis for the week. So from the 7th of October to the 13th of October, CO2 data came out. Nothing really too significant. The only thing I noticed was a volume change in USD, 5% bias change in Aussie, and a 4% bullish change in oil. Now, we're going to run through US and AUD. Don't really have a bias for AU right now, and you guys will see later in the economic news the reason why I'm not, deciding to trade that right now. So, in terms of what was released, the biggest thing that we noted from this week, last week was CPI and PPI. So CPI came in hotter than expected, 0.3%, with a forecast of 0.2, and PPI remained equal. So you can see, reading wise, we have had a slight increase in CPI, leading, obviously as as an indicator of inflation. However, we'll go through the analysis and you guys will see why I'm not really worried about that at all, to be honest. So this week's data, the main ones that we wanted to note down was FOMC, CPI, PPI, and we'll talk a little bit about the University of Michigan consumer sentiment. So FOMC on Thursday was probably the biggest one, and let's have a look and see what came out of it. So most of the survey respondents didn't appear too concerned about an economic downturn in either the near or medium term sort of outlook. The bankers observed that the view of the financial market participants on the path of unemployment were pretty much in line with their own, and they're confident in the US economic situation over the current time horizon. So we've got a sort of quote here that the Federal Reserve appears to remain comfortable with where inflation is and trending. Although inflation remains elevated, we do not see a material effect on the Fed's trajectory of rate cuts. We will be particularly focused on the still elevated level of services inflation. That was from Josh Hurt, which was the senior US economist for Vanguard. So obviously, with the current rates, we are more. The Fed has said in the past that they are more concerned about the employment side of things. A couple of weeks ago, um, with NFP, we did get better than expected readings, and we did get hotter than expected CPI and PPI numbers this week. So one might think inflation still being hard to sort of control, inflation still being quite high, but when we run through the actual numbers, you guys will see that inflation actually is coming down, at least according to CPI. So um, it looks like Josh and the Fed aren't really concerned with anything. It looks like rate cuts are still to be coming. Rate cuts probably won't be the 50 basis points that we got last time. It might be the 25 where you know the economy is headed in the right direction and we're still cutting rates just to make sure that we stimulate the economy, at least for the US. Um, says Fed officials have recently observed that economic conditions are in a solid place, inflation close to the 2% target, and unemployment relatively low in objective terms. There was some concern about it being in a contractionary period, but since unemployment has ticked down, it downwards in the past two readings, so which is a good thing. Powell also stated that monetary suggests the following policy has been restrictive for some time, and now that inflation is looking as though it is on the path to 2%, it makes sense to lower borrowing costs to give the economy a little more breathing space. So the overall sort of look that I've placed down on this is it's a good outlook on the U.S. market. Inflation ticking down, unemployment not out of control, so we're not expecting big rate cuts. And with this sentiment, I would probably say gold is no longer a strong bull bias, just for the fact that that fear is probably not as apparent anymore. At least again with the current readings that we have, it's actually very bullish for US 30 because obviously inflation coming down, rate cuts ahead, stimulation, the US economy wanting to be stimulated by the Fed. That's actually very bullish for the US 30 and all the indices. Also, might be bullish on oil. And I am in an oil position right now, which we will talk about later. Next part of news is obviously CPI and PPI, which is our inflation economic news. We saw that CPI index rose 2.4 in September, slightly higher than the expected 2.3%, but lower than the 2.5 year-on-year increase in August. PPI, which is the producer price index, measures what producers get for their goods and services. It was flat this month. So PPI, core PPI being as expected, PPI, not core PPI, was slightly lower. So look, it's a good sign. It's not out of control. Both CPI and PPI together indicate that inflation is off its blistering pace that peaked more than 2 years ago, but still mostly holds above that 2% target. Again, just reiterating, with inflation no longer a threat with the most recent data, we can suggest rate cuts to come to stimulate the economy. Again, bullish on US 30 and oil. The last one I want to speak about is University of Michigan consumer sentiment. It was down from the actual forecasted, so an inch down, and this is from one of the news articles. Inch down. I just want to highlight the word they used was meager, meager being like little, not really substantial. So there, you can read the sentiment in the words they're using. They're not really too fussed about it, meaning sort of the bias that I would say from the economist sort of reading that data is it's not really a strong reading. We can ignore it. The bias they're taking is, quite a hawkish bias or quite a bullish bias for the dollar. Um, so yeah, I'll keep that in mind and just pretty much still stay on the picture of bullish US 30, bullish indices, bullish oil. Just based off sort of the sentiment and the readings alongside the inflation data that we've just picked up. So if we go to the actual graphs for CPI and PPI, you can see CPI year on year, it's come down. It's the lowest since, last year, since 2023. It's been the lowest it's ever been. So inflation is being controlled. Although month on month was higher than expected, it's still, it's still not too bad. 0.2. It was at its highest 0.6 from a month to month basis. So inflation definitely coming down, and I would say that's being controlled, getting closer to the 2% target there. PPI as from a month to month, core PPI was as expected. So again, not higher than expected, just in line with what we think, slowly coming down. Go past all this. Next week's data that I am wanting to look at, we've got pound claimant count, we've got USD Empire State Manufacturing Index. That might be very interesting to see what actually happens. We have Aussie employment stuff, we have US retail sales. That's the main things I'm going to be probably looking at next week. Not a really eventful week next week, or this week actually, since it's Monday, but we're still going to have a look nevertheless. So in terms of a summary and the bias, so goods jobs data in the from NFP, JOLTS, and unemployment, plus inflation being controlled, as we just sort of seen just then, is, my long bias for gold is sort of off now. I'm going to sit on the sidelines for this one. In terms of oil, now I'm actually bullish on oil, and the reasons for it is that inflation is controlled, rate cuts are to be expected, stimulating the economy and production equals a demand increase in oil. Better jobs data this month as well means, more jobs, more demand. Again, going back to stimulating the economy. There is a whole lot of tension in the Middle East, which obviously creates supply issues. So that's another added bonus. And lastly, we do have the US election coming, which is uncertainty in the markets, and which can cause oil to increase. US 30, again, if I use the same sort of fundamentals from oil, we've got good jobs data, we've got inflation being controlled, we've got rate cuts most likely coming, which is all bullish for US 30. And then lastly, AU no bias right now. We've got AU pretty bullish right now. That's backed up by COT data. We've got high interest rates still for Aussie. It hasn't come down yet. But then on the flip side, all the economic news for the US dollar is also quite strong. So they're both strong. There's no real tipping on one side, which means we aren't going to trade that pair. Now, going to the actual charts, let's have a look. Let's have a look at the actual charts individually. So right now we're up Monday right now in Japan, around approaching midnight. Again, we can see the US dollar very bullish for the past 2 weeks. It's been pretty much bull candles for the last 2 weeks. We've got one doji there. Having a look at gold. Again, I'm not trading gold right now. It looks like it's in this range right now. Could break up, could go down. We don't really know, but we don't have a bias. So we're on the sidelines for gold. I will take that off just to keep it clean. We are in this trade for oil. I really like this trade. So we can see in oil, we've got a downtrend here. 1 touch, 2 touch, 3 touch, 4 touch. This was a support, turned resistance, and it obviously was broken. So, and that breaks that line as well, which should have held there if we were just going based off technicals. So that break, we came down. I think it would have been at the 50% mark. Yep, we came down at that 50% retracement. We had a nice rejection wick here, so we've got a hammer candle there. I decided to enter this trade. Stop loss under here, under this low. You can see right now we are sort of stagnant. Nothing crazy right now. If we do break this high here, I will look to move my stop somewhere here just to mitigate some risk. But right now, look, we have this big stop loss. If it takes us out, it takes us out. US 30, go on the daily chart for US 30. We do have it marked up. So US 30, you can see if we go on the 4-hour chart, we did break this resistance here. So that's actually support now. Change that to support. If price can get back to this level here around that 50 to 75 level, I might look to enter a long position. Stops under this support, resistance support here, and I'll look to trail that, but we'll see how that goes. And like I said, Aussie AU, I'm not going to trade right now. It is ranging anyways, and it's on a down, on a bear sort of trend. No confidence in this trade, so we'll leave that alone. So that is the markup for the week. We'll see how this oil trade goes. I will speak to you guys next week.